Aloha, YouTube investors. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is January 15th. It is Friday, 2020, and JP Morgan just announced their earnings for the fourth quarter of 2020. So we are going to do a quick stock analysis, a summary of how they did over this last quarter, and briefly talk about the year, and also show you my holdings of JP Morgan and my opinion on investing in the banks where they stand as of right now. But first to look at, you can see here that this is my Fidelity account, just over $7,400. It finished the day 0.51% in the red, which isn't bad. If we click on my positions over here, the NASDAQ, by the way, the NASDAQ, the Dow, and the S&P 500 all finished in the red today, but still seeing good things for the stock market because it's still trading pretty high. A lot of stocks are still trading pretty high even though the day ended in the red. So we'll just have to continue to see what happens after President-elect Joe Biden is elected and some of his policies start to go into effect. So anyway, for my Fidelity account here, all time I am up just over 11% at 11.33%. I do have two other main brokerages that I use besides Fidelity. I have a Roth IRA with M1 Finance, and I also have a growth portfolio with Robinhood. And I'll have a card pop up here at around the 2-minute mark for you where you can click on and see how those three portfolios performed for the year. Including my dividend tracker portfolio as well too. So probably at the 2-minute mark, and then maybe a minute in between all the others, because I think it's 3 separate videos if I'm not mistaken. So anyway, looking at JP Morgan back again here, finished the day trading at 138.64. Their ex-dividend date just passed at the beginning of this month, so the pay date will be the last day of January 31st. Their yield sits at 2.5%, 2.55% at 90 cents per share. That is paid every single quarter. So as far as their earnings, how it happened today, early before the market opened, they announced their earnings, and it was expected, the consensus was $2.62 per share, and it ended up being $3.79 per share, so they just blew it out of the water. Good for you, JP Morgan. Just really, really good numbers. And then off of Alpha Street here, when I can find these nice graphs, charts off of Alpha Street, I use them in my videos. Otherwise, I just kind of go to the company's website or CNBC or some Yahoo Finance, someplace like that. So here's their quarter 4 2020, January 15th today. Like I said, they posted, and the numbers were just really, really good. JP Morgan is the largest bank in the United States. So even though I am skeptical of the banks because of the financial recession that I had to go through, new out of college, student loan debt, all that type of stuff, losing my job, moving around. Eventually I found my way to Hawaii, so it didn't end up all bad, but I am still very skeptical about the banks. But JP Morgan is one of the better ones out there, and I heard and read through the whole, not the financial crisis, but when the stock market crashed in March of last year, 2020, that the banks were in really, really good shape, especially JP Morgan. And these numbers show that here, right here. Reported revenue, just over $29 billion. That is up 3%. Non-GAAP revenue, over $30 billion, up 4%. Net income up 42%. And then the diluted earnings per share, like I mentioned before, that actually ends up being up 47%. They just killed it, knocked it out of the park. Slam dunk, all the great adjectives there. Line of business, net income versus loss. You can see here consumer banking down 8%, and corporate investment bank was up 17%. Commercial banking up as well, and asset and wealth management up 10%. So really, really good numbers all across the board for the most part. Net interest income was down 6%, and then we have a quote here from their CEO, Jamie Dimon. I hate to say demon, but I think it's diamond. But they did have to pull out almost $3 billion, $2.9 billion to help with some of the out of their reserves, because they just had seriously, I'm not making this up, they had a ton of money in reserves set aside for if individuals or companies went into default, and so that is part of this $2.9 billion that they pulled out. So, but as he says here, while we reported record profits of over $12 billion, we did not consider the reserve takedown of $2.9 billion to represent a core or recurring profits. Essentially, reserve calculations, while done extremely diligently and carefully, now involve multiple multi-year hypothetical probability adjusted scenarios, which may or may not occur and which can be expected to introduce quarterly volatility in our reserves. Okay, so what is he saying there? He's talking like a CEO probably should talk when they're asked a lot of questions after their earnings report. Even when you do really, really well, you're saying something without saying anything. Don't give them any sound bites. Don't give anybody anything to run back and report on. Are they going bankrupt? Do they have so much money they can afford this, that, or the other? I will say this. Powell did allow for share buybacks, and I believe I read on CNBC's website that they are planning a $30 billion share buyback, so expect JP Morgan stock to go up. So my personal opinion, if you aren't in the financial sector, if you haven't found a bank or a holding in the financial sector to invest in, JP Morgan will probably be my first. Even though I am skeptical about the banks, I only own two, but just for diversification, I do have a little bit of JP Morgan. Then I own, I think, 18 or 20 shares of People's United Financial in my Webull account. So if you haven't subscribed, also, I don't remember if I said this or not, please subscribe to the channel, and there is a thumbs up button for you to hit that tells me that you like the video, or maybe you like me, or maybe you just would like for me not to talk anymore. Either or, please hit that button. I do appreciate it. It does help support the channel. And then as far as balance sheet is concerned, total loans, this is in the billions. You can see quarter 4 of 2019 compared to quarter 4 of 2020. And then total deposits, or actually this is in the trillions with a T, not the billions. Quarter 4 2019 to quarter 4 of 2020, and then long-term debt is in the billions here, has gone down, up a little bit from the third quarter of 2020, but still down from 2 years ago, 2019 now. So, and then they have some other highlights here that you can take a look at if you like. But my personal opinion, like I said, pick up JP Morgan. They are a solid bank as it stands right now. My skepticism it just always seems like something is coming out in the news about one of these banks, whether it's Wells Fargo or JP Morgan or Bank of America. It just seems like something is always going on. And so that just causes me to not really want to invest in them, but they are solid right now, at least JP Morgan. I believe Citi had good earnings report as well too. Wells Fargo, not so much. I'm probably not going to do a video on Wells Fargo. I don't own any of Wells Fargo, but I'm probably not going to do it just because their earnings just wasn't that great. But if somebody does want to see it, leave it in the comment and I'll do a video on it. Maybe I'll do it next week or something like that. But my next video more than likely is going to be about Citi, so stick around for that one. And if you haven't subscribed to the channel, please do so and check out my other videos showing my holdings for my Roth IRA and then a breakdown of my Fidelity account, and you can see my Robinhood portfolio as well too. So have a great day, everybody. Mahalo and aloha.